Welcome. I'm a self-taught options trader aiming to earn an average of $10,000 a month. Let's dive in. Okay, today is Thursday, September the 26th, and the market's looking pretty green. So my overall strategy, I have two margin accounts, non-registered, and basically I'm hoping to sell puts and earn premium. And in a perfect world, all of those puts would expire worthless, and then I would sell another put. In the event that the underlying price goes down, then hopefully it doesn't go down too far and I can sell covered calls. So I've sort of started this a few months ago, probably 2 or 3 months ago, and I was able to sell a lot of puts that expired, and then the market took a bit of a downturn. So I trade mostly in the Bitcoin space because that's what I believe in. But basically, from here, where we were close to 70,000, we kind of went in this really big downturn. We went up a bit, hit the 150-day, and then back down. So I ended up getting put a lot of the contracts that I had sold. So right now, as the price climbs up, I'm slowly selling covered calls to earn premium. So last week looks like we've really been consolidating. And I think as we end September, I'm hopeful that we can continue up to this 68,000 level and maybe even up higher from there. So if we look at a 1 year chart, February, March, we had really large, violent upswings, and it sort of feels like we've been in this downwards channel. I'm not an expert at technical analysis. I just kind of put lines where it looks like they belong. Any background noise, I have to apologize. It is landscape day, and it's a busy household, so lots of stuff going on in the kitchen and all around, so apologize for that. So let's go over and just have a look. So this is my Canadian margin. So I sort days to expire, and you can see all the ones that are short expiry. So this Friday, next Friday, Friday after, Friday after. So within the next 22 days, you can see I've sold to open calls. So in the Canadian market, I trade options on this Purpose Bitcoin ETF. The ticker is BTCC.B. So these at some point were all put to me, and now I've turned around and sold covered calls. And then, because I do believe ultimately that Bitcoin will go up and to the right, I don't think government can help itself. Since the early 70s, when they left the gold standard, they've discovered that they can just print as much money as they want. And I don't think that's going to stop. So things like gold and Bitcoin, I think over time will maintain their purchasing power, or actually in Bitcoin's case, I think it will grow purchasing power, which is positive for savers. So anyways, my longer term contracts are calls that I've bought. So generally, I don't get into many of the complicated options trades. Mainly, I do I buy calls, or I sell cash secured puts, or I'll sell covered calls. I try to keep myself out of hot water or situations where I can get really wrecked in. So anyways, you can see my earliest expiring calls are January 17th, 2025. So 113 days from now. And I guess for my trade, I'm looking to either get closer to that date and hoping that the price of Bitcoin will appreciate, or, if we got up to 150,000, then I'd probably start offloading some of these early ones, and then I'd have some March there. So most of the Canadian margin is Bitcoin. I have a sprinkling of Ethereum contracts, and those are call options. Very small. My big belief is in Bitcoin. Then let's have a look at my USD margin account. I was selling puts, but in that downturn, I got caught, and I got put a lot of CleanSpark, which is a Bitcoin miner, and I got put a lot of Riot, which is also a Bitcoin miner. So CleanSpark, I got put $14 puts, and while today we are having a nice up day, the price is currently at $10. So let's look at CleanSpark. So CleanSpark, usually I'm shooting for 3 weeks to a month. Well, 3 weeks, and I'll look at 2 weeks to a month. So that's about 3 weeks, 22 days. So if I was to sell a $14 covered call for 20 cents, so 20 cents divided by 14 divided by 22 times 365, and then to make it a percent, so it would be 23%. Usually I'm trying to get 50% on this, so I'd probably want to see somewhere closer to 40 cents. And with these miners, because they're so volatile, usually I can get more. So I think that we're going to continue upwards. So CleanSpark, let's just look at the last month here. So we kind of bottomed out here at $8, and then, we've kind of been rolling along here. Let's make this 1 day. Okay, that's better. So here's where we bottomed. So along here, was selling $14 puts, which worked great. But then early August, the underlying blew through that. So I got put a bunch, and so I think we're going to get back towards and above the 150 day at some point, and so I just gotta hold on. And it's kind of the same with Riot. My cost is $10.50, and I got put a bunch of those. So let's see what Riot's at today. So Riot, a $10.50, so I'd only get 10 cents. So 0.10 divided by 10.50 divided by 22 times 365, and then to make it a percent. So it's 15%. So with the volatility in those Bitcoin miners, you can see how fast they go up, also how fast they go down. I'd hate to sell it here and then have it spike up and miss out on all that premium. So I think I'm going to just hold on to those for now. So as you can see, I don't have anything that I've sold. No puts that are expiring and no covered calls. All I have right now in my USD margin account are calls that I've purchased, the earliest expiring in January 2025. And the one that I'm sort of the most concerned about is this Coinbase. It's come up a lot today. I think it opened at that price was around $6, but I'm getting my butt kicked in that one, and that makes me not feel good. This Riot, I've been averaging down, so I've got 60 contracts there, and I'm just hoping I'll be all right on those. Anything longer, these February, March, April, July contracts, again, lots of time, and so I'm not worried about those. So let's see, nothing to do here today or at the moment, and yeah, Coinbase up $12 today. Yeah, I was buying those calls when it was in this $190 to $200 range. So I bought those calls in here, and then we dropped down to 145, and that was painful. That was really painful. So we'll see. Yeah, so not really much that I want to do here today. When the price is down on these, what I've been doing, like when Riot has been down in this area, I've taken it as a buying opportunity. So even though I bought calls here and they were expensive, as the price has come down, I've continued buying. So hopefully I'll be able to get out of that with a nice profit. Yeah, so I'm not going to do anything in there today. And with Bitcoin, I don't really want to buy more calls. Let's see. So I look at this options overview history. So I can see the IV rank, which is, if the IV rank is 100, that means the IV is high, highest level over the past year. So at the money, average implied volatility relative to the highest and lowest values. So highest and lowest. If IV is 100, this means IV is the highest level. So 46% of the time, the IV has been higher. No, lower. So that means it's kind of a middle IV, implied volatility. And the percentile, the percent of days with implied volatility closing over the period of 1 year. So 27% of the time, it's below. So these mean that the volatility is low, which means that the options are fairly inexpensive. The options premium is inexpensive, which makes it a good buying time. So maybe let's see. Maybe we can buy. Let's see, June, September. Let's see here, September 15. Oh, I don't have any. Okay, let's do that. Let's buy some Septembers. So September, and I'm going to go for, let me just see how much money I got in there. So I've got $6,700. So let's buy 5. And the bid is $2. The ask is $2.26. So we'll buy them at 2.210. We'll start. That's the right account. Limit. Okay, so buy. Okay, so it'll cost me $1,050. Commission's $870. So let's send the order. So we can see now that order comes up here. So buy 5 at 210. The other order that I have is a covered call that I'm trying to sell. So it's a 1250 sell to open, 20 units, expiring October 4th. So it's a pretty short one, but I'm hoping to get a good premium. So that'd be $800 for like a week. So let's bump this up, modify. So let's go to 215. Okay, send order. Let's see what's happening over here. BTCC 1254. All right. Let's try 220. Because there's not a lot of volume on these BTCC options, the spread between the bid and ask is usually a little bit big. And when you're buying, you're closer to the ask, and when you're selling, you're a little bit closer to the bid. It's not really in the middle. Okay, so let's try that. That's not working. Let's try 222. Huh. Okay, we got filled. So we can go to executed orders, and there it is. Okay. So it's down here. Okay, insert. Okay, copy. And, oh no, that's an Ethereum one. Don't want that. Okay, we'll copy and paste. Okay, so today the underlying is 1254. The date is 2024, 09/26. We paid 2.22. It's a call. We bought 5, $15 strike, expiring September 19th, 25. September 19th. And the commission was $8.70. $8.70. 358. Okay, so I'm going to move that. Or I could just sort it, I guess. We will sort via expiry date, which is column Q. Okay. Okay, so there it is, 358, 515. And then we will save that. Okay, good. And then let's see where it pops up here. So there it is right there, September 5th. Okay, good. So that will be probably all I'm going to do today. Unless something crazy happens. Okay, thank you.